Welcome back to Return My Capital. Today we're going to take a quick look at the VGT ETF, which is the Vanguard Information Technology Index Fund ETF. So a sector-specific ETF focused entirely on the IT industry. We see over the past year, mostly sideways, although it is up 3.65%. Over the past 5 years, it's up a pretty incredible 170%. And then on the 10-year, it's up, well, just over 4%. Let's take a look since inception. So we see this ETF launched back in February of 2004, probably a real good time for an IT-focused ETF to launch after the dot-com bust. But it is up, just a cool 1,000% since then. So a decent 21-year return. But again, today, trading for $554 per share. In the lower half of the 52-week range, which is between 478 and 648. Expense ratio 0.09. Obviously, that's an extremely minimal expense ratio, as you would come to expect from any Vanguard ETF. I think that's slightly higher than, say, a VTI or a VU by maybe 0.04 or 5%. Doesn't really matter. So we're just going to keep an eye on a few metrics here with VGT. Real quick, let's take a look at the returns compared to the S&P 500, and we'll do a total return. So on the 1 year, VGT again up 4% compares to over 8% for the S&P. On the 3 year, VGT is leading by 4% at 33 compared to 29 for the S&P 500. 5 year, VGT at 165, S&P at 134. And then again, kicking out to the 10-year, VGT at an incredible 465, and the S&P still at a very respectable 200 and let's say 25%. As you would expect from a sector-specific ETF, the holdings break down 99% technology. It is the IT ETF here. Now, I want to show this. This is on the actual Vanguard product site for this ETF. This does a real nice breakdown of, say, sub-segments within the IT sector, right? It's one of the 11 one of the 11 stock sectors. Well, even within that, you'll see here that application software makes up 15%. Comms equipment, think probably routers and switches, makes up nearly 4%. Electronic components, 1.3%. Electronic equipment and instruments, 1.7%. I don't know, that sounds a lot like electronic components to me, but take that for what it's worth. Electronic manufacturing services, 1.1%. Internet services and infrastructure, 1.9%. IT consulting and other services, 3.9%. That's probably something like an Accenture, just a consulting type. Semiconductor materials and equipment, 3.1%. Semiconductors, let's say 28%. Systems software, 19.6%. Technology distributors, 0.7%. And then lastly, technology hardware, storage, and peripherals, 19.7%. So I thought that was kind of a neat breakdown, even within the IT sector here. Very quickly pivoting to the top 10 holdings, a lot of the who's who of any broadly diversified ETF, right? These are companies that make up some of the largest companies in the world, not just United States companies, but the entire world. You've got Apple at nearly 18%, NVIDIA at 15%, Microsoft at 13%. It's a little bizarre seeing NVIDIA larger than Microsoft for me still, but that is the case here. And then there is a significant drop off in individual holding weighting from those three down to Broadcom at 4%. And then even from there, now we're down into the 1% range with Salesforce, Oracle, Cisco Systems, IBM, Accenture, and Adobe. The top, so let's say there's 317 holdings in VGT here. Just of the top 10 holdings, because the weighting of the top three companies is so significant, being Apple, NVIDIA, and Microsoft. I mean, they are three of the very largest companies in the world, but the top 10 holdings make up 60% of VGT. So a very, very heavy weighting in the top 10. And then even from there, really the top three, and then Broadcom at 4% as well. So That's the top 10. Let's quickly take a look and expand just a bit further than that. You've also got, holdings 11 through 20 here, and you've got ServiceNow, Texas Instruments, Palantir now all the way up to the 13th holding. That's pretty incredible with how recent it is since that company went public. But Palantir with just over 1%, Qualcomm, Intuit, AMD, and that's the last of the holdings that make up a full percent of VGT here. So after AMD, that's the 16th highest holding. You've got Applied Materials, AMAT. You've got Palo Alto Networks. You've got ADI. I'm not super familiar with analog devices. And then you've got Micron. So at this point now, you're starting to get down towards a 0.5% weighting. We'll quickly go through 21 through 30. You've got Intel, Arista Networks, Lam Research, KLA Corp, CrowdStrike, Marvell, Amphenol, I'm not familiar with them, Motorola, Fortinet, and Synopsys. So you're starting to see quite a few semiconductor players in here. That's just a sign of the times, I suppose. But golly, yeah, just in the top 30 holdings of VGT now, you're really starting to see these chip players. You know, whether it's KLAC, Lam Research, ANET. Let's see. I guess ANET not so much, but Micron. Applied Materials is essentially a play on the semiconductor industry. Obviously, AMD, Qualcomm, Texas Instruments, and then, of course, Broadcom and NVIDIA. So the chip stocks are really starting to get weighted pretty heavily here in VGT. Now, obviously, a sector-specific ETF focused on IT, these are not typically dividend payers, certainly not high dividend payers. But it's interesting just to see the dividend growth history here. And not that it's a dividend-focused ETF, obviously. It's focused on share price appreciation, or at least that's been the history of this sector. But if you look at 2014, the annual dividend was $1.17. 10 years later, from $1.17 in 2014, in 2024, it's $3.72. So you can see that while you don't have to be focused on investing for income, you're still going to participate as these companies grow, mature, and then oftentimes as companies mature, they may start to provide a dividend distribution, right? We've seen it with Meta now, Facebook, Google, Salesforce. So these mature software companies have begun to pay dividends and should be great dividend growth companies as the years unfold here. Just one last thing, I want to take a look at a comparison of VGT versus a couple other ETFs, just to provide a little bit of context around just how ridiculous the performance of the VGT ETF has been over the past couple years. So we see VGT here compared to QQQ from Invesco, SCHG from Schwab, VUG, also from Vanguard, and then we'll also compare it to the VU and VTI, which is the S&P 500 and the total U.S. stock market. So across the board, expense ratios are phenomenal. Again, VGT with a 0.09, the Qs, QQQ being the highest at 0.2%, and then the rest are 3 and 4%. If we go ahead and take a look at the performance of all of these ETFs over the past 1 year, you'll see it's a fairly clustered, let me see here. It's a fairly clustered distribution. SCHG is the highest performer at nearly 8%, whereas VGT, because of the recent pullback, is the lowest performer at just over 3%. So the NASDAQ has been beaten down. Very recently, the Qs are slightly higher than VGT at just over 5% because there is a little bit more diversification within the QQQ. I think Pepsi's a significant holding inside of that. So it's not just tech and IT inside of the Qs. VU and VTI would be in the middle. You've got VU at 7%, VTI at nearly 6%. Over the past, decade plus, VU has been outperforming VTI because of the outperformance of the mega cap tech stocks, driving the S&P 500, whereas your small cap and your value indexes have been underperforming recently. Quickly look at the 3-year. We'll see the top performer is SCHG again, followed by VGT. And so those two stand at 34%, for SCHG over the past 3 years, and then 31% for VGT, the bottom performer being VTI, again, the total US stock market. So that's just a quick way to tell that essentially tech and growth has been outperforming the market as a whole. And if we look at the 5-year, you'll see more of the same. So on the 5-year chart, VGT now is actually leading the way with 170% performance, followed by SCHG at 165, QQQ at 159, VUG, which is just the Vanguard Growth ETF, at 150, let's say, VU at 128, and VTI at 124. And then lastly, we'll take a look at the past decade, the 10-year chart, starting to see a little bit of separation here. And the very top performer being VGT, our IT sector ETF from Vanguard at 403%, followed by the Qs at 335, SCHG at 266, VUG at 239, VOO at 165, and then VTI at 150. So kick it out a little bit further, and you're going to see a little bit more of that dispersion there. But I think that does a nice job of really highlighting just how well VGT has performed over the last decade plus. I mean, you saw it on the chart since inception. It's up over 1,000% going back to 2004. And, you know, again, this is compared to other very high-performing growth-focused funds, whether that be the QQQ or the SCHG. Both are excellent, low-cost, growth-focused ETFs. Obviously, VU and VTI provides great diversification across the S&P 500 or the entire U.S. stock market. But because growth has performed so well, specifically IT, this ETF has just absolutely been unstoppable. And it'll be interesting to see how things unfold as AI becomes more and more prominent. We'll see what happens with those semiconductor stocks and how that weighting is changed inside of VGT here. But wanted to go through a quick review of this ETF, and I hope you got something from it. Hope you enjoyed it. If you did, if you don't mind, give me a like, give me a subscribe. But take care. Thanks for watching. Let's make some money together. Speak soon. Bye-bye.